When I was 11, I picked stocks. I had the whole wrong idea. I was interested in watching stocks, and I thought stocks were things that went up and down, and I charted them.
Warren Buffett, often hailed as the Oracle of Omaha, is one of the most successful investors of all time. His investment philosophy is revered, studied, and emulated by investors worldwide. Decoding his approach offers invaluable insights into the mind of a master investor who provides a roadmap for achieving long-term investment success. Keep watching this video as we decode his treasured investment philosophy to you. Warren Buffett, widely regarded as one of the most successful investors of all time, has amassed a fortune through his unique investment philosophy and approach. Understanding the intricacies of Buffett's mindset provides valuable insights into his investment strategies and decision-making process. At the core of Buffett's philosophy lies a set of principles that have guided him throughout his career, enabling him to consistently identify undervalued companies and generate significant returns for himself and his shareholders. Central to Buffett's investment philosophy is the concept of value investing. Unlike speculators who focus on short-term price movements, Buffett seeks to invest in companies that he believes are undervalued relative to their intrinsic worth. This approach is rooted in the belief that over the long term, the market will recognize and reflect the true value of fundamentally strong companies, leading to substantial gains for patient investors. Buffett famously stated, "Price is what you pay, value is what you get," emphasizing the importance of focusing on the underlying value of a business rather than its current market price. Buffett's emphasis on value investing is closely tied to his preference for companies with durable competitive advantages, or what he refers to as economic moats. These moats protect businesses from competition and enable them to sustainably generate profits over time. Buffett looks for companies with strong brands, high barriers to entry, and long-term growth potential. By investing in businesses with economic moats, Buffett aims to build a portfolio of companies capable of delivering consistent returns over the long term, regardless of short-term market fluctuations. Another key aspect of Buffett's investment philosophy is his focus on long-term thinking. Buffett famously quipped, "Our favorite holding period is forever," highlighting his preference for holding investments indefinitely, as long as the underlying fundamentals of the business remain strong. Buffett's long-term approach allows him to capitalize on the power of compounding returns, reinvesting dividends and earnings back into businesses to generate exponential growth over time. This patient buy and hold strategy contrasts sharply with the short-term mindset prevalent in today's markets, but has proven to be highly effective in generating wealth over the long term. Warren Buffett, renowned for his astute investment strategies and profound insights into the world of finance, reflects on his journey into the world of stock picking. At the tender age of 11, Buffett embarked on his investment journey, with a misguided notion that stocks were mere entities that fluctuate in value, guided by technical analysis and predictions. He immersed himself in literature, devouring books on technical analysis, including classics like Edwards and McGee. However, his perspective underwent a seismic shift when he encountered the teachings of Benjamin Graham, the legendary value investor, during his late teenage years. Graham's seminal work, The Intelligent Investor, served as a beacon of enlightenment for Buffett, prompting him to abandon the futile pursuit of predicting short-term stock movements. Instead, Buffett reoriented his approach towards investing in businesses, focusing on long-term ownership rather than speculative trading. For Buffett, the distinction was clear. He no longer perceived stocks as mere instruments for profit-making, but as a fractional ownership stake in businesses. This fundamental shift in perspective laid the groundwork for his enduring investment philosophy. Unlike many investors fixated on short-term gains, Buffett's focus transcends daily market fluctuations. He viewed himself not as a stock trader, but as a business owner, whose success was contingent upon the prosperity of the underlying companies. Buffett's investment philosophy revolves around the concept of intrinsic value, the fundamental worth of a business based on its underlying assets, earning potential, and competitive advantages. Unlike speculators driven by market sentiment, Buffett's investment decisions are guided by a meticulous analysis of a company's fundamentals. He seeks out businesses with durable competitive advantages, strong management teams, and consistent cash flows, akin to a discerning connoisseur selecting fine wines. Central to Buffett's approach is the notion of patience and long-term vision. While others fret over short-term market gyrations, Buffett remains steadfast in his commitment to the enduring value of businesses. He views market downturns not as crises, but as opportunities to acquire high-quality businesses at discounted prices. Buffett's legendary adage encapsulates this sentiment succinctly: be fearful when others are greedy, and greedy when others are fearful. His contrarian mindset and unwavering confidence in the intrinsic value of businesses have yielded remarkable returns over the decades. Moreover, Buffett's investment philosophy is underpinned by a profound sense of ownership and accountability. He emphasizes the importance of aligning one's interests with those of the businesses in which they invested. Buffett's commitment to his investments is unwavering, as evidenced by his personal stake in American businesses. Since the age of 11, Buffett has maintained a significant portion of his wealth invested in American businesses, embodying his conviction in their long-term prosperity. Beyond financial considerations, Buffett derives immense satisfaction from the act of investing itself. He relishes the intellectual challenge of identifying undervalued businesses and the sense of accomplishment that comes with successful investments. Buffett's passion for investing transcends mere profit-making. It's a lifelong pursuit driven by intellectual curiosity and a thirst for knowledge. Furthermore, Buffett espouses a broader perspective on capitalism and its role in societal progress. He acknowledges the transformative power of capitalism in fostering innovation, driving economic growth, and improving living standards. Buffett's optimism about the future stems from his belief in the resilience of the American economy and its capacity for continuous evolution and adaptation. Buffett's enduring faith in the American systems is rooted in his first-hand experiences spanning nearly a century. Despite facing myriad challenges, including wars, economic downturns, and pandemics, Buffett remains steadfast in his belief in the enduring strength of the American spirit. He views setbacks not as insurmountable obstacles, but as temporary setbacks on a path to progress. In essence, Warren Buffett's investment philosophy transcends the realm of finance. It's a reflection of his deep-seated values, unwavering conviction, and profound understanding of human nature. Through his timeless wisdom and sage advice, Buffett continues to inspire generations of investors to adopt a rational long-term approach to wealth creation. As the Oracle of Omaha, Buffett's insights into the inner workings of the market offer invaluable lessons for navigating the complex and ever-changing landscape of investing. In addition to his emphasis on value investing and long-term thinking, Buffett placed a great importance on the concept of margin of safety. This principle, popularized by renowned investor Benjamin Graham, suggests that investors should only purchase securities when the market price is significantly below their intrinsic value, providing a margin of safety against potential downside risk. Buffett applies this principle by carefully assessing the downside risk of an investment and seeking a margin of safety that protects against adverse outcomes. By focusing on investments with favorable risk-reward profiles, Buffett aims to minimize losses and preserve capital, ensuring long-term success. Buffett's investment philosophy is also characterized by his disciplined approach to capital allocation. Despite his immense wealth, Buffett remains remarkably frugal and selective in deploying capital, preferring to invest in businesses he understands well and believes offers attractive long-term prospects. Buffett famously avoids over-diversification, instead concentrating his investments in a select number of high-quality companies. This concentrated approach allows Buffett to focus his resources on his best investment ideas, maximizing the potential for significant returns while minimizing the impact of underperforming investments. Furthermore, Buffett's investment decisions are guided by a deep understanding of business fundamentals and a keen awareness of market psychology. Buffett spends countless hours studying financial statements, industry trends, and competitive dynamics to gain insights into the businesses he invests in. He also pays close attention to market sentiment and investor behavior, recognizing that emotions often drive short-term price movements that may present opportunities for long-term investors. By combining rigorous analysis with a contrarian mindset, Buffett is able to identify mispriced assets and capitalize on market inefficiencies. Moreover, Buffett's investment philosophy emphasizes the importance of staying true to one's principles and avoiding impulsive decision-making. Despite occasional market volatility and economic uncertainty, Buffett remains steadfast in his commitment to his investment principles, refusing to deviate from his long-term strategy in pursuit of short-term gains. Buffett's ability to remain disciplined and patient, even in the face of adversity, has been a key factor in his success as an investor and serves as a valuable lesson for inspiring investors seeking to replicate his achievements. Warren Buffett's investment philosophy is characterized by a commitment to value investing, long-term thinking, margin of safety, disciplined capital allocation, and a deep understanding of business fundamentals as well as market psychology. By adhering to these principles and maintaining a patient, disciplined approach to investing, Buffett has been able to consistently outperform the market and build a substantial fortune over the course of his career. While Buffett's approach may not be suitable for every investor, his timeless wisdom and insights continue to serve as valuable source of inspiration for investors around the world seeking to navigate the complexities of financial markets. What are your thoughts on this? Make sure to leave them below and don't forget to like, share, and subscribe to our channel for more.